Hi, I'm Jarrad Brown, Australian expat financial planner based here in Singapore. Welcome to my video series. At the moment, we have one of the worst conflicts that we've faced in many years between Russia and the Ukraine. Now, we're not going to go into the humanitarian aspects of the conflict today, nor are we going to try and predict exactly how this unfolds or how it ends. As we speak, as we're doing this recording, Russia is trying to make its way into Kiev, and there are some suggestions that their mission is not going to plan. But we'll see how it unfolds. What we want to look at today in this video is if you're invested or if you're sitting on cash and wondering what to do, what are some of the top tips when it comes to managing your money when we have such a global conflict. So let's dive into my top 5 tips. Firstly, let's cover off one of the worst possible things you can do whenever we have such a conflict, and that is panic selling. Usually it's going to be at the worst possible time, because if you think about things from a common sense perspective, markets are priced based on what investors expect to happen, not what's actually happening. So if people are uncertain, if people are scared about Russia taking over the world, naturally the worst time to sell is going to be when we're not quite sure what's going to happen next, when Russia is bombing civilian buildings and casualties are starting to increase. So whatever you do, avoid panic selling. Of course, review your investments, but avoid panicking and selling your holdings while markets are going down. Now, my second tip for you is to add to your portfolio. If you're sitting on cash, you've got cash in the portfolio, or you've been waiting to invest, wondering when the right time is, consider this as an opportunity to start adding some blue chip investments to your portfolio. We've had a sell-off earlier in the year on the back of interest rates rising. We've just had the first increase from the Federal Reserve announced in March. So naturally that's led to a bit of a sell-off, particularly in the profitless end of technology. So they say that the greatest time to be buying when we look at global conflicts is when the battle is going on. And the worst time to be buying is when the battle has reached a conclusion. So consider this as an opportunity, if you have been wondering when to invest, that it may be time to start drip feeding that cash into your portfolio. My third tip for you is to review your asset allocation. We've had volatility left, right and center since the beginning of 2022 and even throughout 2021 in some sectors. You may find that your aggressive portfolio has become more balanced, or your balanced portfolio has become more aggressive depending on what you're invested in. So review your risk profile, make sure you're comfortable with the level of volatility that you're taking on, and make adjustments, rebalance your investments wherever it makes sense to do so. My fourth tip for you is do not stop the regular contributions. If you're investing in your super, in your pension, in whatever other savings plan or investment portfolio you have, one of the worst mistakes you can be doing, other than panic selling your entire investment portfolio, is to stop the contributions. If we look at some simple maths, if you're not buying when uncertainty is at its highest, you're naturally only going to be buying at higher prices, at more expensive prices. So if you can, maintain them. If you can go further, even consider increasing your regular contributions. These are often the greatest times to be buying when uncertainty is at its highest. My fifth and final tip for you is to consider when cheap isn't really cheap. We've seen all sorts of crazy valuations throughout 2020, 2021, even over the last decade, particularly in the technology sector. A lot of profitless companies built on hopes and dreams that arguably never were going to make a serious impact on the market, trading at ridiculously high valuations. Now, a lot of those stocks and investments have come off 40, 50, 80, 90% in some cases. Just because they've dropped whatever that percentage may be, doesn't mean it's now cheap. It may have just been a crazy investment to begin with. So make sure you're doing your homework, do your research, again, keep your investments diversified and take advantage of the opportunities as they arise. I hope you found this helpful. If you have any questions, comments, or even tips you'd like to add, drop a note in the comments below. Please remember to subscribe. Thank you very much for tuning in, and I look forward to seeing you next time.